Welcome to the top 5 crypto news in an update. On today's news, Bitcoin price bounced at 8.8k support showed trader keep buying the dip. The Bitcoin price dropped below 9,000 for the second time this week, but trader continued to on each dip. Also on today's update, Binance-backed blockchain auditing firm partner with HDAC to track Internet of Things device. We'll also be looking at Decred co-founder called PayPal and crypto an odd combination. Also on today's news, money reimagined, crypto diversity problem. We'll also be looking at the crypto market. Bitcoin is trading right now at $9,091 per coin. And last but not least, blockchain expanding advertising industry, but crypto remain a no-go. Crypto has been left out of the advertising industry, but blockchain technology may be its ticket back into the innovate and change the space. Also, if you like to discover how to earn Ethereum daily, guide directly to your wallet with this simple and lucrative Ethereum smart contract. Discover how I generate 20k in the first 6 weeks of getting started with this Ethereum smart contract. The link should be in the description below. Welcome everybody. On our first news, within the last hour, Bitcoin price dropped below 9,000 rally to a daily low of $8,930. Since June 24th, Bitcoin price has been losing momentum, while pinned below 20 MA, and today's drop to $8,813 coincided with a surge in the sell volume. As discussed in previous analysis, buyer has been keen to purchase every dip below 9,000. And today's drop brought the price near the edge of a key volume VPVR, noted at $8,800. If the bears succeed in pushing the price below this level, the top-ranked digital asset could drop to 20 MA, 200 MA, $8,325. But failure to find support at this moving average could see the price sink lower to $7,400 to $6,800 zone. Weekend correction occur on thin trading volume. Investors are accustomed to mild pullbacks over the weekend as trading volume tends to thin. It's also possible that the larger side trader are watching from the sideline. After yesterday, 1.06 billion Bitcoin future option expiry and the approaching month close next Tuesday. According to Cointelegraph, contributor Marcel, this market is in a bit of a neutral zone after Friday massive option expiry. In private comment, Peachman said, option expiry did not have a meaningful impact as most of the call options were aimed at 10K or higher. This event wiped down 67% of the previous day, 1.7 billion in open interest, including 70% of the Chicago Mercantile Exchange and 50% at the Deribit. The future expiry has a slightly different story as the CME traders roll over. Rio at a longer maturing most of the future position on June 25, leaving a mere $38 million for Friday expiry. BitMEX and Deribit open interest also remain unchanged. After expiry, indicated most positions were rolled over, but at OKEX, half of the 860 million future contract open interest mature. Overall, this indicates trader unwilling to open new position ahead of the weekend. Friday financial market negative performance might have spoke Bitcoin investor as the correlation between the S&P 500 and the Bitcoin remain relatively high. On our next update, auditing firms Certec and HDAC are teaming to bring Internet of Things lab device on a blockchain. HDAC blockchain platform attempt to combine secure authentication, seamless mapping, and machine-to-machine transaction in a blockchain network with a lab device. Certec team of blockchain engineers worked closely with a HDAC to audit the design and implementation of its code base, which is expected to be released in the near future. The company told CoinDesk on Friday, HDAC had previously tapped Certec to audit its code base, where the security firm learned that HDAC planned to build blockchain solution. A Certec spokesperson said that this led the company to seek out a formal partnership. A Coinbase is a collection of source code used to build software system and act as generally repository. Because of their HDAC, future plans were decided it would make sense to formally partner with one another as a public promise of HDAC focus on security and a symbol of Certic's ability to support larger enterprise-level solutions, such as HDAC. Certic marketing manager Connie Ngo said in an email. Also on today's update, PayPal could be gearing up to work with crypto asset. According to recent rumblings, although decreed, co-founder Jake Yongkong-Piat is unsure of those rumors' vitality. It is hard to say whether these are rumors or not regarding PayPal accepting cryptocurrency soon. Yongkong-Piat told Cointelegraph via email correspondence when asked about the rumors. The recent news showed PayPal seeking to fill a crypto and blockchain-related job position, while the rumors circulate of the platform listing crypto asset. Although the addition would bring digital asset greater availability, Yongkong-Piat added that the move would not line up with PayPal's system. PayPal specifically is notoriously for depriving its user of access to legitimately acquire funds on their platform, with little to no justification, he said. User having their fund restricted in this fashion is something cryptocurrency are designed to prevent, making this integration, if it's indeed in process, an odd combination. The Decred co-founder noted, a report several months ago showed difficulties around users' PayPal payments. Based on the different term flagging transaction and installing them, PayPal, along with its subsidiary Venmo, use a system that automatically flags keyword and payment memo field that could indicate a violation of the U.S. section. Slate say in February 2020 article, the scene around such term flagging remain a difficult conundrum, as the security and protection remain important. It is monetary freedom, although not money related. A similar solution has plagued the crypto YouTube community in recent months, as many top channels suffer ban as a result of content flagging. Bitcoin crypto pioneer asset at its core serve as a method of value transfer storage. Away from the government control, users can hold and transfer value themselves without authorities directly swaying the value of the global non-government asset. In a contract, payment services such as PayPal use government currency inside control parameters. A fiat payment platform notorious for depriving access to funds will be adding support for cryptocurrency, which are notorious to have no restriction on funds. Yongkong-Piat said the following on his comment of crypto and PayPal as an odd mix. On the next news, a few years ago when Mint Media Lab research Joy Bulawini was leading an Interact digital art project, she found the facial recognition technology employee was far better at recognizing her light-skinned MIT colleagues. The discovery sent Bulawani on a mission. She found the algorithm Justice League and started doing research that built awareness about the bias in the software algorithm. One paper she co-authored with Timid, the technical co-lead of the ethical artificial intelligence team at Google, found facial analyst software had an error rate of 34.7 for black-skinned women versus just 0.8 for light-skinned men. Facial recognition is at the tip of the iceberg. Bias are inherently present in all forms of artifact intelligence algorithm. Those digital machines that increasingly run our world. Over the year, an extreme lack of diversity in a computer engineer has left white men with a disproportionately large influence over all software design. Unconscious bias. Now, finally, a topic of a great discussion across the United States, means they end up creating products to serve the need of the people like them, not necessarily those of others. This is the vital issue of the algorithm-dependent cryptocurrency and blockchain industry. If this technology is to have broad impact on the world, it must engage a wide population. If Bitcoin, for example, is to become a global currency, if it is to become a monetary standard accepted by people of vastly different background, it must be accessible and valuable for a full cross-section of those enabling our health system to manage privacy-protected data from fighting pandemic. We better make sure these platforms don't discriminate against one group or another. A key problem is the digital impoverished communities of color worldwide have significantly reduced access to the information tools needed to participate in the blockchain and crypto development. Addressing this imbalance is vital for crypto adoption. While exciting to see usage rate growth in places like Nigeria and Venezuela during the COVID-19 crisis, We must also recognize the painful circumstance leading to these people and to Bitcoin and stablecoin. Economy and breakdown, severe dollar and shortage, and failed public health system. And in the grand scheme of things, those newly increased numbers are a tiny proportion of the total developing world population. We have a long way to go before we bridge the crypto divide. A natural starting point is education. While a number of interest groups have sprung up to support the expansion of blockchain knowledge among women and people of color, the industry must do more. Funds should be dedicated to high school and college serving underprivileged students about the technology and the opportunity it poses. Online course and self-training programs should be designed for and delivered to the minorities. And of course, crypto companies should also be hiring from those communities. Let's look at the Bitcoin price and where are they at and where are they likely to go. Bitcoin is still trading at $9,091 per coin. Ethereum is still trading at $224. Bitcoin Cash is trading at $222. Bitcoin Silver is trading at $158. Binance is trading at $15. ADA is trading at 8 cents. LinkedIn is trading at $4.51. Despite seeing substantial growth in popularity, topping Google search trend in amid recent halving, the corona pandemic and mainstream coverage, the cryptocurrency industry have somewhat been left out of the advertising war by online and network, social media platform, and even national government. In 2018, Facebook banned cryptocurrency advertising amid its initial coin offering hype. Later that year in March, Google followed the banning of all advertisements of cryptocurrency, especially ICOs and binary option. In the same month, Twitter also banned all cryptocurrency advertisement, except for a few public companies. Several social media networks in China also applied to ban crypto advertising. Following the introduction of restriction by the Chinese government, the bans, of course, were not random attack on crypto, but rather a blanket measure to prevent scam and illegal fundraising from acquiring users through this platform. In fact, it is possible to advertise on Facebook. For example, if the user filed a formal request with Facebook, this measure is used to force potential scammers to go to the Facebook rather than the opposite. William McLeod, the creative director of the Paradox Group, a crypto-focused marketing agency, told Cointelegraph. With a recent development on both Google Ads and Facebook, platforms are allowing for blockchain-related content to be advertised only after undergoing heavy scrutiny. It is the first step in the right direction to the mainstream acceptance of blockchain technology as the important industry that can tackle many problems we are currently facing. There are many fundamental issues in the advertising network, like the overabundance of middlemen and third-party service providers that are required to navigate the space to a lack of transparency and even advertising fraud, which rampage in the industry. As Cointelegraph previously discussed, only around 35 cents for every dollar of advertisement revenue make it to the publisher, which of course lead to the lower revenue for the publisher and higher price for the advertisers. Advertisement fraud is also a major issue in the industry, as a $44 billion will be lost to ad fraud by 2022, which create a major loss in all sizes, including the end users, and leads to even higher price for advertisement. Transparency is also a major issue even when actual fraud is not involved. Advertisers may have a little notion of how their money is being spent, as Petrusanko explained. I believe that transparency is and has been the main issue. The lack of knowledge as to where the advertising money goes, open a large loophole for fraudulent traffic. Censorship is another huge issue now because traditional and network are restricting many ads, especially when the subject related to crypto. This prevents many online business from growth and drastically limit their reach. Will blockchain technology be able to change online advertisement? While the outlook is extremely promising, alternatives have a long way to go when it comes to competing with a giant like Google or Facebook, which dominate the online advertising market, given their massive user base and reach. Nevertheless, there are many signs that point to the growing use of blockchain technology in the advertising industry. For example, Brave Browser have recently joined the Instant Global Payment Network, PayID, and IBM has even partnered with a big advertisement to create a blockchain-based solution to reduce inefficient and fraud and improve the digital advertising industry. According to Mincheck, blockchain technology, immutability, and direct payment capabilities can truly revolutionize the world of online advertisement, telling Cointelegraph. The immutability of the data and the consensus on the instruction and payment term pre-deliver can help reduce the supply chain step and decrease costs for the advertisers and publishers. On the other hand, crypto payment can introduce new payments method. This can increase publishers' liquidity, eliminate the need of custody of funds by ad network, and increase security for both parties. This has been your boy Ismail on today's top 5 crypto news and update. Have a great day. See you again tomorrow.